Good morning, everyone. Hope you're having a great time. You know, over the past 24 hours, we spoke a lot about technology, about AI, about innovation, about policy. But when it comes to this green transition, I think, in my opinion, the biggest part would be finance. Of course, all of these innovations, AI, tech, they do help with the green transition, but one of the most important aspects, I think, is finance. Because without the money, those solar panels would have never left the drawing board. Also, the wind farms would have remained just an idea, and resilience would have stayed a dream. So I think we're doing a good job. But last year, if we look at the numbers, we spent, I think, almost $2 trillion on this transition. It's a big number, 2 trillion. But if you want to reach net zero, we need double this amount, and every single year. And that's where the private sector probably comes in. The trillions are there. It's just about how do we unlock these figures. So the question is, how do we unlock them and channel them into real climate action? So this is the conversation we're going to be having today, and I'll start with you, Your Excellency, Lucie. So, especially with the EU, we have so many ambitious targets when it comes to global climate, but we do often see this kind of gap in actual financing. And the question becomes, how can we better connect international commitments with real flows, especially when it comes to private capital, and into the markets that we need them the most?
Thank you very much. And first of all, thank you for having me. It is a great honor to engage in this conversation, especially I'm sure you know that climate action and increasingly climate finance is a big priority for the European Union. When it comes to bridging the gap, I think the first thing that comes to mind is that we really do have to recognize that public finance alone cannot bridge the gap. And that we have to use the public finance in a way to accelerate also private funding flows. Of course, I'm sure you know the EU is very committed to driving the systemic reforms necessary to scale up. We believe that we pay our fair share. We're the largest provider of public climate finance with 28.6 billion euro last year, which helped us also to leverage 7.2 billion euro in private finance. Now, if the shares were inverted, that we would be talking in a completely different way, because if we still provide over 20 billion euros, but the public flows are actually triple of the public finance, then we are in a different ballgame when it comes to climate finance. So we must continue to evolve, and we have to find a way to change the climate public financing from gap fillers to market shapers, from donor-driven to country-led, and from fragmented to systematic. And what is needed in our opinion, I have actually 5 areas that we're trying to pursue. The first one, obviously, is enabling environment, and I'm sure we're going to hear about that. And that includes credible and coherent sustainable financing frameworks to give the investors certainty and long-term certainty for their funding. Then, of course, supporting developing pipelines. I think we have a long history in doing that, of sustainable projects, but we need to see more of that. We need to see more the country ownership, which is also where I spoke about the country-led and not only donor-driven. Thirdly, it's promoting development of sustainability financial instruments. I'm going to float here a very popular word from the European Union. It's the green bonds. We have our EIB here with me actually today, the European Investment Bank, which is the EU Climate Bank, and which committed to 1 trillion euro climate finance, climate and environmental investments by 2030. Then we have to develop de-risking mechanisms to actually enable the private sector to launch projects without having major risks that it's not going to work out. And finally, the most important one, especially for me as the ambassador, is dialogue and cooperation. We have to create frameworks not only at bilateral and regional levels, but also multilateral levels, and we have to do this together.
So you've already done a lot, but there's still also a long way ahead of us. Fantastic. Mohammad, before I turn into the local regulations and markets here, I want to stay with the global picture, also with you, Rahul. And climate change is already today showing up in credit analysis. And you, Moody's, you're doing a lot of job on this. So how do you today, as Moody's, you do integrate climate risk into credit ratings? And the question also becomes, does this change financing costs when it comes to leaders versus the laggards?
Yeah, thank you so much, Hussein. And on behalf of Moody's, what a privilege to be at this fantastic event. So thank you very much. You mentioned a number, 2 trillion. I'd like to just dive into that number a little bit more. We often talk about the energy transition, but I'd like to talk about the economic transition, because in that $2 trillion, you have the minerals that need to be mined for electrification. Mm-hmm. You have the connectivity, whether that's transmission and distribution or storage, and you have the application of end use, whether it's heat pumps or electric vehicles. All of that needs to be financed. And according to Moody's calculations, if we want to meet our government targets and commitments, that leaves an annual investment gap of around $2.4 trillion by 2030. That's around 1.6% of GDP. Actually, in the MENA region, it's slightly higher, given an earlier stage of electrification, about 4%. And as the ambassador mentioned, I think that's going to require a blend of higher government spending, but also the right ingredients to attract more private sector participation, and also the mobilization of multilateral balance sheets as well. So what does this mean for companies that are trying to tackle the investment gap? Every year at Moody's, our analysts put out a heat map that looks at the credit implications of environmental risk exposures. And I can tell you there are 16 sectors that we've identified with around $4.9 trillion of Moody's rated debt that face elevated credit exposure to transition. And companies in these sectors, whether it's oil and gas, airlines, building materials, they are looking to decarbonize their operations, their supply chains. They're looking to invest in green solutions, but it's complex. Some will do it in a way that reinforces their business models and protects their creditworthiness. Others may invest in the wrong technologies or make poor investment decisions. Mm-hmm. So it's important that investors do their credit homework. But all of this suggests that the debt capital markets are going to have to play a really important role in financing the investment gap. We expect to see more investment in transition assets and activities, more innovative solutions around blended finance, and more demand for things like second-party opinions and assessments on green bonds to really help investors have confidence that there is credible climate capital that's being accelerated in the market.
Fantastic. Thank you for these insights. Mohammad, let's focus on the UAE now. And from a UAE regulator's perspective, what have you been doing over the past few years to promote these kind of channeling investments into sustainable finance and encourage more capital going into green projects? Can you take us through the roadmap and where are we now?
So first of all, it's my pleasure to be here in the World Government Green Summit. And I need to explain to you a journey that ESCA, as a regulator of a financial market, have, let's say, captured through the last 15 or 16 years or more than 20 years. Think about it that previously we were requesting from the listed companies to disclose only the financial statements. Mm-hmm. So on a quarterly basis, everything was disclosed Then in 2007 and 2009, we have introduced the governance requirement to be disclosed. So we have shifted the requirement of the investors, the potential investors, and the international institutions on what do they need to be disclosed through the financial market. A lot of investors, they're looking to financials, what profits that the company are doing, what is the improvement, and so on. But at the same time, people, they want to know what are the other side of the company, what are they doing, especially in the non-financial part. So the corporate governance covers a lot of information such as the board of directors, who are the board of directors, number of meetings, and whatever other initiatives that has been done by the board and other information that is not a financial. 2 years or 3 years after, we have introduced a section that needs to be disclosed through the corporate governance report, and it covers the sustainability. We called it the ESG. And I remember the companies, they were coming back to us as a regulator, what do we need to disclose? We're speaking about 13 years back. And they don't understand even the ESG requirements 100%. We're speaking since we have a big and a small companies. And we're explaining to them that E is environment, social, and governance, and you need to disclose whatever is it's happening through the company. And they have reported it on a yearly basis. As I mentioned, the corporate governance and the financial statements is a mandatory requirement currently to be disclosed in the financial market before the General Assembly, so that the shareholders will have the full information on their company. And later on, a couple of years back, we have introduced the integrated report. The integrated report is based on the best practices, since UAE also we're looking into what is implemented internationally. So whatever we can see that we can improve the market and we improve that will attract new investors, we implement it in our country. So we introduced the integrated report, which covered the financial statement, the auditor report, the board of directors report, and the non-financial part, which is the corporate governance report and the sustainability report. It's mandatory to be disclosed before the General Assembly on a yearly basis. And it's all available through the financial markets website. The requirement of the sustainability report is both financial market put their requirement to what should be disclosed through the sustainability report. So everything is available, publicly available. This showed the things that I have mentioned, showed you that we're not only looking at what is implemented today. Whatever improvement that we can do it through the financial market, we're doing it directly that will keep our market much more stronger, attract more institutional investors and international investors, and make our market much more stronger.
I will come to this again, Mohammad, and see how did it reflect on the investors' sentiment and confidence in these companies, especially with these announcements and the market as a whole. But let me move back to you, Your Excellency, and also go back to the region. So, of course, the EU has always been and will always be advancing strongly on sustainable finance through the Green Deal. And the question is, or before I touch on that, I want to talk about, always the GCC is being criticized as being the biggest fossil fuel producer, and how important is reducing fossil fuels today for the GCC to attract more sustainable investments? What kind of industries and our partnerships do you see that are most promising today? And do we need to see this shift in the region?
I mean, importance of reducing fossil fuels has been recognized here in Dubai at COP28, I think. So it's not only something that I can say as the EU ambassador, it's also something that the UAE, the region, and basically is globally recognized. At the same time, I think throughout the time we are aware that we do not yet have enough sustainable or green energy to provide to the world and to the transition that we need. So there will still be a fossil fuels presence in the energy mix, global energy mix, for a couple of years. You cannot stop and completely phase out fossil fuels until you have the alternative energy sources fully developed. So of course the attraction in the sustainable finance, especially in the Gulf, goes hand in hand while still using the fossil fuels, ideally investing in decarbonization at the same time, and I think that's also part of the investment and the consideration. You can see that the Gulf, and especially UAE being in the lead, they focus on economic diversification, not only because fossil fuels will be depleted at some point, but also the popularity is decreasing, I think. And of course, the world is shifting towards the alternative energy sources. But at the same time, economic diversification makes sense. It gives actually lower risks that exactly when you deplete certain economic sources, you have alternatives and you have other sectors that will continue generating the revenue in the country. For us, economic diversification, cooperation with the GCC has been in the forefront. I actually myself designed a project some 10 years ago, which seemed like a climate change project, but eventually from focusing only on climate action cooperation, it was economic diversification, and we saw a very strong business case in a lot of sectors that fuel the economic diversification, which is actually moving away from fossil fuels in the GCC. So it ticks all the boxes. You have the economic case, the business case, you have the sustainability, which is a priority for the European Union, and you also have actually the economic stability or certainty for the Gulf states. So it is important, but it is not only politically important, it is important also economically, and it makes sense to phase away, to move away towards the renewable energy. And if I can bring it to the UAE saw this long time ago. They invested in renewable energy sector, I think maybe 15, 20 years ago, you started investing in it. So you're also the front runner in the Gulf, and I think a good example.
So I can say that we're happy with the transition.
I think we are quite happy with the transition.
Okay, fantastic. Rahul, let's talk about green bonds. I mean, this is one of the main topics today, or these kind of transition bonds as well, sustainably linked bonds. Are they scaling fast enough today?
Yeah, it's a great question. Look, the green bond market is younger than the iPhone, just to put it into context. And the ambassador mentioned the EIB earlier. It was the EIB that launched this market with a climate awareness bond. And we've seen tremendous growth and diversification over the last decade. The last few years have seen relatively flat growth in the market. We're around $1 trillion globally, and we've started to see the number of first-time issuers fall as a share of the market. Now, that's understandable. The market is more mature, and we're seeing more seasoned issuers. I think there are other challenges for first-time issuers like trade and macroeconomic factors that may have taken a bit more center stage. But investors continue to like this offering. They like the product. They like the disclosure, the accountability, and the transparency that comes with clear use of proceeds, allocation, and reporting. I think an interesting trend that we're seeing in the market that bodes well for this region, I'd be very happy to hear the panelists' views on this, is we're starting to see the green bond market or the labeled bond market move beyond traditional green projects. So yes, solar, wind, EVs, they remain a key component of what's being financed. But we're seeing emerging technologies like low-carbon hydrogen, other low-carbon fuels, but we're also seeing new investment themes, energy-efficient data centers, or lithium mining, all being financed by green bonds. And we're seeing that in this region, so where you have very well-established green financing programs like Masdar on wind and solar. We've had the privilege to work with M-Steel recently on their green financing framework, where they'll be looking to channel proceeds into low-carbon steel made through electric arc furnaces. Or we've worked with the government of Oman that has a specific use of proceeds category around water-efficient and energy-efficient data centers. So as we start to see more diversification in how these proceeds are being used, I think that bodes well for some of the green investment opportunities in this region. And just to put that potential into perspective as my final point, the label bond market in the Middle East and North Africa is about 2% of all bonds being issued. Globally, that number is 15%. And in fact, in parts of Europe, it may be as high as 1 in 4 or 1 in 3 bonds that are labeled. So as we start to move from just pure green to some of the other projects that we know are going to be important in this region, energy-efficient desalination, hydrogen, etc., I think that bodes well for continued growth and potential in this region.
That's great news. Thank you, Rahul. Mohammad, so you took us through the journey over the past 20, 15 years, what ASCA have been doing to kind of promote sustainability investing and also help investors to know where to allocate their funds. And now the question is, what's next for you? What do you have on your plate now?
So maybe in Her Excellency and Rahul mentioned the green bonds and sustainable related bonds and sukuk. The UAE government and ASCA have supported the green bonds and sustainable related bonds and sukuk by issuing a regulation in this regards in 2023. This initiative have supported issuing 14 billion US dollars in 2023 in regards to the green bonds and sustainable related bonds and sukuk, and 5.5 billion US dollars in 2024, by the end of 2024. So the UAE government and ASCA are supporting the green initiatives and sustainability initiatives. So also to support also listing these bonds in the financial market, the board of directors of ASCA issued an exemption of any company who are willing to list their bonds and sukuk in the financial market from the fees of listing it for the year 2023 and 2024. Other initiatives that us as a regulator are working on in regards of the carbon trading markets, and so we're working in a project with the Ministry of Climate Change and Environment. It's led by them with the other entities to create a carbon market trading. So the Ministry of Climate Change will be responsible of the registrar of the carbon credits. Us as a regulator of a financial market, ASCA, will be responsible of regulating the platforms which the carbon credits will be trading on. It has been reached to the final stage. We're waiting only for the cabinet resolution to be issued for this great initiative. Also, regarding the gender diversity, we took a very strong initiative to support women in the field of the board of directors within the local public joint stock company. So in 2021, it was a mandatory requirement to start as a listed company to have at least one woman as a board member in the listed company. The percentage was 5.6 in 2021. Currently, by the end of 2024, the percentage of representation of women in the board of directors reached to 15.9. A lot of compliment we have received as a great initiative to support the gender diversity within the financial market and the listed companies. Also, as a regulator of a financial market, we have also a national group called the Sustainable Finance Working Group. ESCA, as a regulator, we're a member of this group. The group includes the Central Bank of UAE, Ministry of Finance, the free zone regulators, DFSA and UAE, DFSA and ADGM, the Ministry of Climate Change. And our aim and main target is to support the UAE initiatives, such as the UAE Net Zero 2050, the National Climate Change Plan of UAE 2017-2050, and the UAE Green Agenda 2015-2030. We have a lot of achievements. First of all, previously we were having a yearly public statement about what has been accomplished by us and what is our next steps. Also in 2023, we have announced since we're regulators of financial markets and regulators of the financial institutions, we have a common ground. We need to follow it. And at the same time, we can add whatever we want in addition to the ground that we have it. So we have issued number of principles based on on a yearly basis. So in 2023, we have issued principles for the effective management of climate-related financial risks, which was issued in November 2023. This initiative is to focus on the corporate governance and climate financial risk management. In June 2024, we have issued a principle related to disclosure, it's called the Principle of Sustainability-Related Disclosure for the reporting entities. Currently, we're working also on a very hot principle, which is the principle of climate transition planning. And we're done with the public consultation. And we're in the final stage of reviewing the comments that has been received and issue the principles. So these initiatives that ESCA and UAE government are working is to support the sustainability within the financial market, with the financial institution, and to keep the UAE as a solid and a base to attract institutional investors and corporate investors in UAE.
Thank you, Mohammad. Let's go now into your core job today. It's all about collaborations and partnerships, and you've been for so many years in Riyadh and now the UAE. So, Your Excellency, let me ask you, how are these collaborations today translating into concrete financing opportunities for the region? Can you give us any examples of projects that is happening in the UAE and the wider region? Are we seeing enough of them?
So let me just start by saying that accelerating impacts of climate change that we see everywhere, but also geopolitical shifts, have made green transition and climate action a priority, both in the EU, which is quite historical, but also in the Gulf, which makes my job a little bit easier, considering that this is a big priority. There are great opportunities for collaboration on renewable energy, clean tech, but also in terms of research. But when it comes to climate finance, that is something that we've been focusing on in particular since COP28, because climate finance was actually one of the key deliverables, let's say, when it comes to COP28 in Dubai. And we're focusing on trilateral projects between the Gulf, in my case in particular the UAE, the European Union players, including EIB, and I have to say that's also one of the reasons they're here today, and in developing countries in Africa, North Africa and Middle East, or also elsewhere around the world. We need to work with the European banks, with the national development banks, but we also especially need to work with the local partners. And we need to combine the leverage and the relationships that we have. So, for example, in the Arab region, I think it makes perfect sense to work with the Gulf countries, because they know the host country, let's say Egypt, better than we do in a way, or they know how to do it and make it a successful project. At the same time, we have a long history in in developing such projects from the perspective of blending public and private finance, de-risking, and in a way also capacity building in the country to provide the environment and to build the pipeline. Same in Africa. We're very much present in Africa, and there is a lot of interest with the creation, for example, of the Altera Fund. There is a lot of interest in investing in renewable energy or clean tech projects in Africa. So we're pursuing contacts and project opportunities with all of these partners. Concretely, we have recently announced the Trans-Mediterranean Renewable and Clean Tech Initiative, it's so-called TMET, which is designed exactly to mobilize large-scale private investments in the region, and where we actually want to attract also partners from the Gulf to engage in what we actually see as a joint priority. And I'm hoping to actually find a concrete project test case that might be announced in the coming months to showcase how this collaboration could work, and then to ideally scale up and see where we can go together hand in hand.
We're looking forward to these collaborations. Thank you, Your Excellency. Rahul, I think one of the main things investors they're demanding credible transition plan, and this is also touched now on from Her Excellency. So for GCC governments today and firms, what do you think the practical steps that are needed, really needed now, like clearer policy, better data, or stronger targets, to make their projects truly investable and to attract these private investments today?
Well, firstly, I'd like to congratulate my panelists and the regulator for the work they've been doing on transition planning. I'm a member of the Transition Finance Council in the UK, and there's a lot of energy going into providing clarity around what constitutes a successful transition plan. I also think the investor is in the middle of a journey of discovery. I call it from evangelical to pragmatic. And what do I mean by that? I think, firstly, the binary focus on 1.5 degrees is being challenged. There is a greater appreciation that there are certain sectors, take cement for example, that simply don't have the technology today to be net zero emissions in a decade or two, but we still need to help that sector decarbonize. I think secondly, there is increasing focus on not just target setting, but implementation. And is that implementation business relevant? Is it value accretive for that business? So as an analyst, look through a CapEx plan for a company, I'm looking at how will these investments reduce costs over time? Are they going to unlock any new green revenue opportunities? Because if something is business relevant, it means it's probably going to stick, and it's probably going to be implemented over time. So you're seeing a bit of a journey of discovery, and I think that's important as well when we think about different regions. So another point that I want to make is that net zero is not a one-size-fits-all narrative. What do I mean by that? Well, we know that different economies, different jurisdictions have very varying degrees of carbon intensity in their economies today. And so the pathways are going to differ quite significantly. So at Moody's, we provide something called a net zero assessment. We look at companies' plans. And typically, for a company that has a concentration of its activities in high carbon jurisdiction, emerging markets, we tend to give greater weight to their ambition than the same company in an advanced economy, because the starting point is different, and that impacts ambition. So I think it is really important to think about regional context, to think about sector differentiation when thinking about credible plans. And that is starting to be appreciated and incorporated into investment planning in the market today.
That's good to know. Mohammad, beyond regulations today, how can the ESG disclosure and also the governance standards build investors' confidence while also ensuring that the UAE, as always, will remain attractive and competitive?
So basically, when we're working on any regulation or working on a new project, we're thinking of all participants or all stakeholders who will be participated with us and who will be later on benefiting from it. So we're thinking about the international institutions. What do they need to invest in UAE? So whatever regulation that will be issuing it will be thinking that we need also not only the investors within the country or GCC or the MENA region, we want also the international institution to be attractive to the financial markets. Second of all, we're thinking about the investors. What do they need? Do they need disclosures to be available? Do they need more information to be disclosed? So we're thinking about the investors and what do they need to be disclosed or what information should be available. Even the regulation, it should be clear to the investors, clear to the institutional investors, clear to regulators, that whatever is mentioned, it's clearly enough for them to understand it. Second of all, we're looking into other regulators. Doesn't mean that we're looking what has been implemented in one country. It doesn't mean that we should not do the same. We should learn from them, improve the regulation in a way that it will make our country much more stronger, much more better place to invest, a solid place to invest. Also, as I have mentioned previously, the mandatory disclosures is very important. So, and the right timing when to disclose these information. So as an example, the integrated report, it's publicly available before the General Assembly, so that the investors will take the decision in the right time, either to stay with the company or reinvest in this company or increase the investment in this company. Also, our doors are open. A lot of institutional companies, a lot of other regulators, a lot of, let's say, consultants, they're coming to ASCA, asking us if we can do some amendments, if we can do some improvements. Our doors are open. We're hearing them, and if we feel that there is a gap, we'll improve our regulation. We're doing this in a regular basis. Also, we're doing a lot of public consultation. Nothing will be let's say, issued without having a proper public consultation. When we're saying public consultation, we're saying that the local companies, either a listed company, financial institutions, even internationally, and other regulators, we're asking them, what do you think about the draft that we have it, so that we can have a proper regulation when it will be issued in UAE. Maybe to conclude what has been mentioned in my statement. So ESCA is playing a role, a world-class role as a regulator to ensure the position of UAE as a leading financial hub. So this is what is our aim, and we're working closely with everyone to reach to a leading financial hub. Thank you so much.
Thank you, Mohammad. Your Excellency and Rahul, I have one common question. Are you confident in the next few years, let's give a mid-term target 2030, that we can close this investment gap?
We have to.
We have to be.
We have to. So we have to close this gap, and that means that we can. I believe in that. I believe that when you strive for something, you absolutely try. I think in the EU, we started a long time ago, and often there are cases of our policies that are perceived or interpreted negatively. We live in a different world now. Decarbonization is not a bad word anymore. Climate action is actually quite positively perceived policy. The emission trading scheme has delivered important changes in green transition in the EU, and we're now even looking at it contributing in international climate action and green transition potentially. So I do think that we can close the gap, but I also want to say that we have to.
We have to and we can. Okay, and let's check with the numbers now. Fact check with Rahul. Are we closer to closing this gap?
So Hussein, I'm a credit rating analyst. We're normally quite glass half empty, right, when we think about the world. In this instance, I'm probably glass half full, and I'll tell you why. We've talked a lot about transition and electrification, but it's also coming at a time where we see these other really deep currents: digitization, AI, automation. And I think many of these currents complement and are synergistic with each other. So as we start to see more automation, things like smart grids or smart logistics, that makes us more efficient. That makes us less carbon intensive. We also get better real-time data around performance that investors can use. We get smarter contracts for things like digital green bonds. So as many of these trends come together, I think the technology currents that we're seeing will support greater investment. Are we going to completely bridge that 2.4 trillion gap I mentioned at the start? I think the jury's still out, but we'll make a long way there for sure.
So I think climate finance probably is no longer about if or why. It's a must. It's about how fast, maybe, how fair we do move the money. And of course, as what we've heard, the challenge is really big, but the opportunity is also bigger. And this is what we want. We want a resilient economy. We want to deliver growth. We want a sustainable future for us, for our kids, for the generations to come. And I would like to thank you for this insightful discussion. I really learned a lot from it, and I hope you enjoyed it too. Thank you very much, our speakers.